There's emerging volatility in the market, which is trading around the world at record levels, and you just have to see, the tremors that go through the market when trade war kind of tension rises, or geopolitical tension in general. And these are the kind of opportunities that we look for, I guess, as investors. I mean, the bottom line is there's low interest rates, and that's not going to change anytime soon, so that benefits asset prices. What you don't want to be doing is trading momentum. So this is very much what Under the Radar looks for, which is value. So this is a good time to hunt for value and to get growth and to get good dividend yields, and that is very much the focus of Under the Radar report. Well, blue chip value and Under the Radar in general are looking for stocks that are underappreciated, stocks that aren't the flavour of the month. And banks are very much in that category. And the reason why I don't think it's an exaggeration to say it's a once-in-a-lifetime opportunity is that the banks have actually been getting stronger throughout this period when they've been underperforming. And that's because basically the regulatory authorities have made them increase their capital adequacy, so they're stronger, their balance sheets are stronger than ever. But also we're seeing evidence of house prices bouncing in the capital cities. So we're looking at a situation where these stocks are getting sold, meanwhile they're actually, the underlying companies are getting stronger. So it's that discrepancy between what the stock market's saying and how, I guess, fund managers are selling them, because there is that poorer sentiment that retail investors can really take advantage of. Fund managers are looking for quarterly returns. As a retail investor, you're not looking for quarterly returns, you're looking for lifetime returns for 3-year, 5-year and beyond. So this is why we see a great opportunity in the likes of CBA. In the small cap spectrum, we cover over 100 stocks, and we whittle them down into our small cap best buys. And those best buys lately have been performing really well. Over the longer term, they've been performing well, like the average return is over 70% versus our sort of average recommendation return of closer to 60%. But most recently, we've seen Panoramic climb 40-50%, where we took profits off the back of a bid, but that's alerted the market to value. So we're seeing that trading above its the initial buy price. We're seeing SomnoMed has climbed 50-60%, because it's a turnaround story that the market's generally appreciating better in the US, and they've got that US growth. And the other one, medical developments, I mean, that's climbed 60% in the past few months that they've entered China. So that's a big deal for them, but they've really got all their growth ducks lined up in a row. So these are the sort of stocks that can produce the leverage effect and the growth that is essential to maintain your portfolio's returns in the longer term. And also we've got 5 stocks that subscribers really have to check out, which are in our best buys at the moment. Well, we were talking about the best buys before, the small cap best buys, and a lot of those stocks are on the basis of being quality small caps. So what is quality? I mean, if BHP halved, you would be buying more. So quality is the sort of thing that you're looking for in a stock that you know is going to be there in 10, 15 years time. So these are the sort of stocks that when they get sold off, you'd want to buy more. And it's important for investors to know that, amid this sort of turbulence we're seeing in the markets, that quality doesn't change. So the underlying fundamental values of the company, won't change, aren't dependent on the markets. So we are looking for quality, and we're also looking for emerging quality. And emerging quality are those sort of companies where you can see step changes in the opinion of the market, and you can see even more growth. So we're going to be focusing on that in 2020, and we've certainly focused on it, in recent months at Under the Radar. Christmas is always an exciting time for Under the Radar, because not only do we have a lot of stock ideas coming up, but we also have a round table where we've got high profile fund managers giving their thoughts on what's happened and what's to come. Like we've got, the Jeff Wilson's, Carl Siegling, we've got Perpetual, Jack Colopy, Chris Prunty from QVG. So we've got, you know, younger fund managers, older fund managers, and everything in between. And we've also got lots of stock ideas coming up, and we also drill down and give people, you know, what does under the radar stand for again, how, you know, the types of stocks we're looking for, you know, what we look for in companies in terms of our investment metrics. So we get back to basics around Christmas, and we also have lots in the Christmas hamper, which I'm sure subscribers will look forward to.